Ladies and gentlemen, welcome. My name is Alex Dvorkin and I'm a managing partner at 40 Capital. We specialize in a very unique mathematical approach to the stock market where we calculate the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. Now, on top of that, we've developed a number of very powerful timing indicators, and when we combine them together, we can essentially predict exactly what the overall stock market or individual stocks will do going forward in both price and time. And we can typically do it on multiple time frames, whether we're talking about short term or long term, doesn't really matter. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. So as a firm, our primary objective is to find stocks that will 2x, 5x, 10x within a relatively short period of time. So we're essentially looking for the next NVIDIA, Apple, Bitcoin, Tesla, and so forth. And the way we do it is with the help of our very powerful software that once again calculates the market in multidimensional space and then essentially predicts what the underlying stocks will do in both time and price. And what we're looking for very important bottoms in certain equities. And when our system picks them out, it can then project what the overall next move is going to be. And when that move is essentially indicative of a significant increase in going forward, then that is the company that we are very interested in. And as I do my videos, you can very easily understand what I'm talking about because that's exactly the stocks that we talk about in our analysis. So we're looking for those very important bottoms, and then from those bottoms we project stocks that will increase that 2x, 5x, 10x going forward. So today we're going to talk about yet another fast mover that our system identified. The company's name is Dow Inc, which is different from the Dow Jones. And but before I jump into that particular stock, let me just very quickly explain to you what a fast mover is. Fast mover is a stock that will move relatively quickly, 50% or more, within a relatively short period of time of 12 months or less. Whether it's to the upside or the downside doesn't really matter. Obviously, we're looking for upside stocks with a bit more interest because it's a little bit less risky, and the gain percentage is can be quite significantly higher. So what you see in front of you is the chart of crude light, and what you see at the top and the bottom of the charts, those who've been following our work are fairly familiar with that, but it is a cycle. We call them cycle composites, and basically bottom cycle composites are responsible for the bottoms and top cycle composites are responsible for the tops. So what we found over the years is that when there's a relatively short period of time between a major cycle top and a major cycle bottom, or in this case a major cycle bottom and a major cycle top, when there's a short period of time of 12 months or less, it is typically, not always, but typically an underlying equity or the overall stock market will move relatively fast between those 2 points. That's typically when surges or crashes develop in the stock market or individual equities. So this is very clearly demonstrated here in 2007, 2008. We had a major cycle top for the crude light, and then subsequently it collapsed within an 8-month period of time into a very important low here. So a major cycle low. And we had a very similar situation here. The chart has to be adjusted a little bit due to the cycle growth, but we had a major bottom here during COVID, and then subsequently crude light surged into this particular top. So when we are able to identify, we're able to identify these equities with our software once again because it is able to calculate the time variable and the price variable, and it knows what the period of time is going to be between those 2 points. It is able to pinpoint equities that will have a major cycle top and major cycle bottom with arriving within a relatively short period of time between them. So it is in those junctures that we go in and we mathematically confirm whether or not any particular stock will move fast or not. So let's look at an example of what I'm talking about, which is once again Dow Incorporation, not to be mistaken with the Dow Jones. So the only problem with this particular stock is its short trading history. That they were spun off from, or it was a separation, spin-off. I don't really recall, but from DuPont. So the trading history from 2019 is not sufficient enough to generate long-term calculations and long-term cycles. So we have to work with a short-term composition of this particular stock, which is not as accurate as a long-term composition. So just bear that in mind. But what it shows on a shorter-term scale or in terms of our calculations is very, very interesting and very attractive from risk-reward perspective. So once again, what you're looking here at is cycle composite. As you can see, we are projecting a very important bottom arriving here. As a matter of fact, it is showing that it arrives on August 18th, and we had this major bottom so far on August 18th. Okay. Subsequently, it is saying that it's going to increase into this particular cycle top that is scheduled to arrive in November of 2025. Now, bear in mind, I would automatically indicate that this particular longer term cycle has to be extended into the beginning of 2026, but nevertheless there is a very short period of time between this major cycle top and major cycle bottom and major cycle top. Now the lines you see on the chart in front of you is what we call cycle clusters, and this is once again a very simplistic representation of a very complex mathematical concept. So what we do is we scan the chart back, and we then our proprietary cycles, and then we project them into the future. And what we found over the years is that important turning points in individual stocks or the overall stock market typically happen not when any particular cycle arrives, but when there's a multitude of cycles arriving at the same time. So if we have 2, 5, 10, the more the better cycles, particularly if they're long-term cycles arriving at the same time, it is indicative that there's going to be a very important turning point there. I typically use Dow Jones as an example. If you recall, March 6th, I believe, of 2009, when we had that important bottom, we had 15 long-term cycles arriving within a 2-day period of time. And that's how we know that there's going to be a major turning point. So something very similar here. But once again, the problem with this particular setup is it's short-term oriented because we don't have enough trading history, so we have to kind of it brings a little bit of more variance than we would like into the stock. So we had this particular cycle on August 11th, 2 cycles, but what we have is we have the major 6 cycles and arriving in the middle of November, and then 6 cycles arriving in the middle of December, which indicate that there's going to be maybe possibly a double bottom formation. Actually, the stock bottom just short of our actual projection, which was approximately $19 a share. I believe it bottomed at approximately $21 a share. So definitely within the margin of error, but basically the point I'm trying to make here, whether or not we had the bottom is not very clear. Some of our work was within the margin of error for the bottom, and some of our work indicates that we're going to see $19 a share approximately for the bottom upcoming over the next couple of months. So the way to approach this is from a technical perspective. You have to have a technical entry just in case the bottom has been arrived, but at the same time you should be prepared that the bottom hasn't arrived yet, and that stems from this short-term variations that we unfortunately have to deal with. So if the bottom is not in, and the bottom will be achieved, for example, in November when those 6 short-term cycles arrive, then we have to be prepared for that as well. But question becomes what happens thereafter. So let me show you. This is the most attractive part of the whole scenario. So if we our calculations or our software basically able to identify the bottom. So due to the variance, it's unclear whether the bottom has arrived here once again, but let's assume that it has. From this particular bottom, we already have the capability to project what the stock's going to do going forward in both time and price. And as you can see, it is showing the green regions are just yet another representation of our 3-dimensional calculations. And what is showing here is that the stock will go to at least $66 a share. But in our experience, these levels are typically broken, and we typically top around these levels of, let's say, between $80 and $85 a share for the upside. So you can do the math. Very attractive opportunity. If the stock bottoms at 20 and goes to 80, that's 300% within a relatively short period of time of 12 months or less. In this particular case, most likely 6 months or less. So as you can see, it's a wonderful opportunity. the stock is bottoming, and that's the power of our software. It is able to, not necessarily software, but that's the power of our mathematical calculation. Software is just a helpful tool in all of that. It is able to identify these particular bottoms. It is able to project what the stock is going to do next, and in both time and price, and that's what makes it so powerful. So this is perhaps a bit more watered down than not exact, let's put it this way, as it could be. And to counter that, we do have a 30-day free trial associated with our work, where we have the targeting, where we have both the downside and the upside for this particular stock. We also have trading setups if we are interested in taking a position in this particular equity. So if you would be interested, there's no strings attached, no credit cards, none of that stuff. All you have to do is go to our contact page, send us a quick email, and we'll set you up with a free account to our service for 30 days, and you can check all of that out. Also, we have a webinar coming up on Friday of this week. It is limited to 10 people, and during this webinar, we basically talk about our mathematical calculations. We show you how we do it. We demonstrate how powerful our software is. We show you the output of all the equities that we expect it to appreciate significantly going forward. And finally, we talk about the overall composition of the stock market and what the stock market is going to do going forward over the next couple of weeks, over the next couple of months. And we typically shy away about talking about that particular topic because that's our bread and butter, but in this particular format it's going to be available. So the links to both of those things, the webinar and our 30-day free trial, is in the description of this video. If you would be interested, please send us a note and we'll set you up. Thank you very much for your time. We'll be back with another update tomorrow. We'll be looking at Oracle, which is quite interesting because of what just happened last week. Thank you. Bye-bye.